Good evening, folks. How are you guys doing? Today is going to be a quick look at the long-term rates, how they've performed so far, and how they're going to impact the way we're going to look at dollar index for the last month of Q1, right? So we all know the long-term rates, the 5-year, the 10-year, and the 30-year yield. Those are positively correlated to dollar index. So for those of you who have watched my my dollar index forecast, the two that I've uploaded for this year, where I was giving focused on how dollar is going to trade. I think the first one was I think during the first week of Jan or second week of Jan. I'm pretty not sure about that, but you can see how dollar has respected that forecast and went south, right? And then I think a week ago or 2 weeks ago, again I did another forecast where I initially highlighted the 97.80 price level as your point of call for shorting opportunities. We can go to the daily chart, and then you can clearly see how the 97.80 was a critical point of reference, a point of interest in our price action for the continuation of dollar going to the downside. And you can see how that has panned out. We have now filled up this imbalance here, right? And price is meandering around that level. So what we're going to do today is we're going to look at the three long-term rates and how I'm expecting them to affect the way dollar moves from the current levels, right? So we're going to look at the 5-year first, right? So what I'm going to do, I'm going to look at the higher time frame of my analysis, which is the weekly chart. Now, if you remember correctly, we did highlight this, that we are anticipating lower prices in the long-term rates from these two levels of premium, right? So this was a monthly. Let me go to the monthly chart. Let's see where we. I want to highlight the proper structure that I was working with. Okay, let's go back to the daily. So you can see these two last up close candles. Our weekly bearish OB price was trading inside that level the moment I did that analysis, and you can see 4 weeks later we are way down. We have reached a discount now, so we should anticipate price to find what support around this level here. Okay. We should expect price to find support in the coming week or two, right? So this bullish OB is going to provide support. That's a given, right? Now we also have this old low here from 2 weeks ago, from the week of the first week of Feb, right? This old low here, crucial for your analysis, right? That's a resistant level. You anticipate price to find resistance once it reaches the 3.69 zone. So that's the 3.70%. Now this is on the 5-year yield. Now when price reaches such a level, guys, it's not a case of you just entering to say, okay, no, Ivan said we are going to reach 3.70%, so we should short. No, you need to then include other aspects of the market where you look at what's happening fundamentally, what's happening in the US. That can negatively affect these long-term rates to continue going to the downside. So I'm expecting price to find a bit of support from current levels. We could go further. We could probably test the low of the OB, right? Could probably test the low of the OB, which then in turn provides you with what? Shorting opportunities on dollar index. But for that to happen, there has to be some form of redistribution into fair value. And where is fair value gonna come on this chart here? Fair value is gonna come once we have the weekly open of this week that we are in now. So we are waiting for the weekly candle here to open, and then we're gonna get our imbalance. Once we get our imbalance, we're going to get our fair value gap, right? That will be your redistribution point. You're expecting price to redistribute, trade probably somewhere near or around the old low of 2 weeks ago. You see, that would be a redistribution. Then from there you can start looking for shorting opportunities. But if it's a case that price just opened, traded and went south, targeting say 3.55, right? If that is the case, then you anticipate dollar to trade into discount, into premium, for you to be a seller. And you can already see we've got this last up close candle before last week's expansion to the downside. That's a bearish OB. So this is basically a base. So we've had a drop, base, and then drop. We should see a redistribution into fair value for another push to the downside, targeting 96.25, right? Coming back to the long-term rates on the weekly chart, we can see we have really moved to the downside, right? We really expanded big time. We might get a price action like here, right? Somehow, somewhere, we are going to find support. It's something you have to keep in mind as a trader. Market cannot just keep continuing going to the south. It has to breathe. That form of breathing for the market gives you more emphasis in your focus. Say, okay, we are getting the price action that we want to see. All right. Looking at the 30-year, I'm going to skip the 10 because the 10 is a bit detailed. You can see the 30-year also. Price found resistance inside this weekly bearish OB from the August 25. Yeah, August 2025. I think it's the last week of August. We found what? Resistance, and price is pushed to the downside. And now, likewise, like the 5-year yield, price has now reached what? A level of support, right? We expect price to find support around that weekly bearish OB, right? And this is the law of the OB. This becomes your old low. For those of you guys who follow me that much, or those guys in the mentorship, you now know how I look at price. Now there's a reason why I'm using this old low here for fair value. If you're in the mentorship group, you should understand the reason why I'm not using this candle, using this last up close candle before price found support and then expanded to the downside. So again, on the 30-year yield, we're waiting for this week's candle for us to have fair value where we'll be hunting for shorting opportunities. There's no reason for you to trade long on dollar index. When you see the price action on the long-term rates, rebalancing the price action, there's nothing wrong in being a long trader, but you have to risk less, right? Because at any given time, these assets, they can expand to the downside. There could be a huge sell-off, right? So you can see the 5-year and the 30-year, both assets price have reached a level of support in the form of bullish order block, right? Now we're going to go to the 10-year, right? Same applies on the 10-year. If you're following through with these weekly mentorship videos, you'd have noted that we highlighted this bearish OB, right? This is our bearish OB. Price has found what? Resistance, and it expanded to the downside. Same applies on the 10-year. Price has also now reached a what? A bearish, a bullish order block, and price is bound to find support. So from a bearish order block, we have traded all the way to a bullish order block. Now, this move to the downside, guys, the bearish momentum that we have seen in dollar index had already been shown in the long-term rates. We were anticipating dollar to trade to the downside. In terms of targets, it would have been easier for you to target that. You see, that's inefficiency, right? We don't have anything like that. Imbalance, draw on liquidity. There's nothing amongst this price action. Let me zoom in. There's nothing amongst these price action. 1, 2, 3, 4, 5, 6, 7, 8, 10. There's nothing on this weekly chart that would have given you any doubt whatsoever that we are heading back to this imbalance. You see, the moment that clicks in your head, the moment you can be in a position to see that and respect that kind of price action, the better you're going to see improvement in your trading, right? Because you're going to be taught to be patient. You're going to be taught to respect your levels, right? So that's the 10-year yield, right? Likewise, we also have last week's low. Now look at the difference between the 10-year and the 30-year in regards to the old laws that are going to form fair value gap. This one is from last week, but if I come to the 30-year, you can see it's the last up close candle, because this candle did not trade below this bullish candle. That gives this low a very important makes it a very important level. Yes, you can use this, but you might miss trades because price might not really reach that level, right? You might miss trades and price might not reach the level of last week's low. That's why I used this old low here, right? So we're going to come back to the 10-year. Now the reason why I look at the 10-year yields in detail, personally, I feel like the 10-year yield has got more emphasis when it comes to how it affects the dollar index, right? There's more to it that I can relate to in terms of how I determine where dollar is going to trade to. So with that, we're going to go on to the daily chart for the 10-year yield, right? Now on the daily chart, remember the old low? This is the old low. What do we have on the old low? Right at the equilibrium, more or less the equilibrium of this last up close candle before the Thursday and Friday drop off. What do we have? We've got our bearish order block. You see, 4.15%. This now is a level where I'll be looking for price to trade to before move all the way towards, say, maybe 3.96, right? This will be the structure that I'm anticipating heading into next week, right? That's the structure that I'm anticipating heading into next week, right? So I'm expecting dollar to trade to the downside. I'm expecting the long-term rates to be under pressure again heading into this coming week. I'm anticipating the long-term rates to be under pressure, so as to dollar. But from which levels? I'm going to go onto the weekly chart on dollar, right? The weekly chart on dollar, the red line, these two focused arrows, the first one has been fulfilled. You can see this becomes premium, this level here, and specifically the equilibrium point of this OB. So we're looking at around 97.42. 97.42 on dollar index is ideal area for you to be hunting for shorting opportunities on dollar index, heading towards 96.20, right? Those are the levels that I'll be looking at. That's the level I'm looking at on dollar index for it to find some serious pressure. Now on the daily chart, you can see what do we have around 97.42. We've got imbalance, right? We've got this fair value gap right there. This fair value gap right here, and that will be the draw on liquidity, right? You'll be expecting price to be drawn into this level before another expansion to the downside. But remember, with where the long-term rates are, it won't be a surprise that market is going to open and then it expands all the way to the downside. But that's highly unlikely because this weekend has been a bit quiet in terms of fundamentals, unless if something happens in between now and market open. So I'll be expecting price to follow through with proper price delivery. And Monday being a bank holiday, the long-term rates might not open. Dollar index might open, but with less liquidity. So the long-term rates, I'm not sure if they're going to open tomorrow. So it's better to wait for the equities market. It's better to wait for the equities market for you to be in a position to participate in the market. You wait for the equities market to open. So that's probably somewhere around 3:30 in the afternoon, because it being a bank holiday, market is going to be dead quiet. So Monday, like I've already emphasized, Monday for me is a no trading day. It's basically where I'll be looking at the markets to see how I can pan out my Tuesday and the rest of the week, right? So that's pretty much what I wanted to share with you guys. But in all this, now I'm not going to talk about currencies. What I've already covered. By now you should know how to put the currencies into the equation, right? What I've already covered, you should know how to put the currencies into the equation, how you can approach assets like USD CAD, UJ, Euro USD, Pound USD, even gold. You should know how to approach those assets, right? And then just to round up, you can see how the calendar is. Just to round up this mentorship video, this week, Monday, we've got a bank holiday. We have a bank holiday tomorrow. Tomorrow is bank holiday. Let me just open this week. You can see the Monday, Canada, China, United States, all holiday. The most important one is the bank holiday, Washington's birthday. We do have some fundamentals for the yen. We do have fundamentals for CAD. And then we also have, what's his name? Nigel speaking. Those yen ones, they are like preliminary releases. So they might not really have much of an impact on the yen. And then on Tuesday, we've got RBA meetings. That's crucial for the Australian dollar. And then during the course of the day, we're going to get CPI for CAD. We're going to get FOMC members speaking. We do have quite a lot of FOMC members this week. So Tuesday, Wednesday, Thursday, proper good days for you to be in the markets. But make sure you understand how you approach your assets, how you get into the markets. Thursday is actually a very good day, mostly for those day traders. So up until Friday, we do have a calendar that is proper for our trades. But as for tomorrow, it's you find yourself being in the market tomorrow, just be careful, or don't overexpose your positions. Do not open bigger lot sizes or risk too much. So that's pretty much about it. For those who haven't subscribed to the channel, it's the best thing to do, guys. It's the right thing to do. Support local YouTubers. It's the only good thing that you can do for us to keep giving you guys this free content, especially if you're a trader. There's nothing wrong in you being a subscriber, because there's times when I upload these short snippets of gems that can help you in your trading. And if you haven't subscribed to the channel, hit subscribe, like and share the videos, guys. Even commentary, if there's something that you haven't understood, just comment on the video and I will engage with you guys. And if you're in the mentorship group, you know where to find me. Just hit me up on Telegram. So yeah, that's pretty much about it. I wish you nothing but the best in your trading in this upcoming week. Thank you.